All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we are so happy and grateful for each and every one of you spending your time with us this morning as we get ready to take a look at the Forex market, the technicals, and the fundamentals to see exactly what we can take advantage of. So, without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots and lots of notes. Let's make sure that we participate and engage, especially for our newer members. Hey, we want to help everybody to become consistently profitable traders through your learning curve and compressed time frame. So let's make sure that if you can hear me loud and clear, drop me a 1 in the chat and we can get this morning session on. Awesome. Appreciate it. Good morning, everybody. Good morning. Ryan, good morning, sir. How are you?
Good morning, bro. I am doing well, man. Glad to be here. How are you?
I am doing great. Actually feeling a lot better. Not as stuffy.
Glad to hear it, man.
I'm getting old and the allergies start kicking in on me. I don't know what is going on or the weather changes. Who knows? But it has not been the best. But hey, I'm grateful I'm here. Every time you wake up in the morning, you got a chance to do something great. So I am looking forward to the day.
Yes, sir.
Yeah, and with that being said, let's switch over, right? Let's go back. So early yesterday morning, we talked about these reports coming up yesterday, but at 10 a.m. yesterday, we had the ISM manufacturing PMI job opening. Okay, very, very important report, and the FOMC meeting minutes from the Fed. So just to talk about ISM manufacturing, we came in at 48.4. The forecast was 48.5, but slightly down. But we're looking at the overall picture and what's going on in the consecutive months. Okay, so for those of you who don't know, right, the ISM manufacturing index, it's a great indicator, right, to measure the overall health of the economy. Okay, so we see that for December, right, because everything is lagging, and that's what this is showing at this 48.4. So in December we're 48.4, so we're down slightly from 49, right? So you can see previously forecasted it was 49. Okay, for the second consecutive month, it's been below 50. So 50 is neutral, and then anything above 50 is very, very good, right? So we can see, so for consecutive months, that ISM number has been down, right? So, but now, right, orders have been below sub 50 for 4 consecutive months running, right? So 4 months in a row. And now overall production, okay, is starting to trend down for the first time since 2020, right? So since the pandemic, all right? So we've seen the orders starting to go down now, okay, for 4 consecutive months. And now, right, we see that the overall production, right, in manufacturing is starting to fall off a little bit, okay? So all of these data points help build a bigger picture, right, for investors in regards to where is the economy going overall? How are we really starting to feel this how are the rate hikes starting to take effect on the overall economy? Okay, and then so that's ISM manufacturing, and then right, so it's been a mixed picture, right, a mixed bag. Okay, so in regards to how the market is responding, so we've got the JOLTS job opening, and it came through at 10.4 million, almost 10.5 million on a forecast of about a little over 10 million. Okay, so that's strong still, despite the rate hikes, right? So that is down just a smidgen from October's numbers. So it's a mixed bag right now. So people are still trying to push through it. But as we saw yesterday, Ryan talked about it, Salesforce laying off 10% of its workforce. It's kind of a little bit all over the place right now as we're starting to really, we're trying to build that picture for those lagging effects from the Fed rate hikes. But still, right now in the short term, despite those hikes, right, we saw increase in jobs. Okay, so a share of the labor force job openings remained at 6.4%, indicating demand for workers is still high, right? Still high. But inside of those reports, there's always some caveats, right? So the job market, right, is still where it's at, still right. The job openings coming above forecast. But one of the things in some of the reports that I'm reading is that disposable income, right? So these are key data points when we talk about fundamentals and we try to get a picture of what can be happening moving forward, right? In regards to recession, right? We know there's lots of recession fears out there. We see the stock market's down a bit, well, a lot overall, but coming in the year moving down. So kind of spoke on that, but stock market is down. Disposable income is declining. So things are starting to turn right a little bit. So 10.46 million on the job openings, but at the same time, right, that's why I said it's a mixed bag. Disposable income is starting to decline. All right. So these are some of the things that investors look at as they build that report moving forward and build a consensus, right, on where this economy is going, which plays directly into overall sentiment. All right. So that's those job openings, and then from the FOMC meeting minutes. Hey, looking forward, they find it necessary right now, okay, that there is a need to maintain restrictive levels, right? So restrictive levels, restrictive policy regarding rate hikes, right? When you look at Joe's job openings at 10.46 million, they're still coming in strong. As Chairman Powell says, right, we're still not feeling the pain yet overall in the jobs market, right? So the jobs market is really sticky right now, and that continues to be a concern. So I think let me see what the statement was. They came out, policy would need to be maintained until incoming data provided can confirm that inflation was on a sustained downward path to 2%, right? And in those meeting minutes, a lot of members looking at things from a historical perspective gave stark warning about prematurely loosening monetary policy. All right. So the Fed, right, is still looking for further rate hikes. Okay, you got a little discrepancy for the market. A lot of people, a lot of investors, right, are banking on the Fed pausing rates here soon. And but from these meeting minutes yesterday, that doesn't seem like it's going to be the case. So, like I said multiple times, continues to be a mixed bag, and we'll continue to keep our eye on things. Now, for today, right, Thursday, January 5th, we got ADP non-farm employment change from ADP private sector, forecast of 152K. So we'll see, right, if we come in right at that number, above or below. Okay, so it kind of plays to right our technicals. The market moves up, down, and sideways. We're either going to come in at forecast, above forecast, or below forecast. And you see this bright red folder here, meaning that at 8:15, right, we can see some market volatility surrounding that report. And then on Friday, we move into non-farm payroll, unemployment rate, average hourly earnings for the United States, also unemployment rate and employment change for Canada. So, right, we are off to a busy start fundamentally coming into the new year. Any questions on the fundamentals? No? All right. Quickly want to switch over to trading economics. We can see price pressure in Europe to ease. Okay, this is key. The annual inflation rate in Italy fell to 11.6% in December from 11.8% in each of the previous 2 months, in line with market expectations. Preliminary estimates showed. Also, data released early in the week for Germany, France, and Spain signal price pressures in the Eurozone may have peaked due to easing energy prices after natural gas costs fell more than 50%. And we knew with the war raging that energy prices, right, big issue going into the winter. Hasn't been a super cold winter so far, which is a huge positive. So this data is actually positive for the eurozone, positive for the euro. Eurozone produced inflation slows to 11th month low. Okay, so that's good news for the euro. Then oil rebounds after a 2-day drop. Okay, so key things going on as we switch over and look at technically what's going on in the markets. All right, so Ryan, anything else to add to what we covered fundamentally?
No, sir. Nope, that's it. That's it.
All right, good deal. Good enough. Let me take the chat. No questions. All right, so let's move on. Take a look at the charts. Hey, look at the dollar index from the weekly chart, and we see that we've got a little bit bullish momentum for the dollar this week, right? So we've hit a high and then we've come down and retraced a bit, but we're still at this monthly support level. We'll see, right? Based on those Fed meeting minutes, look at what's going on with non-farm payrolls, ADP first today to see if the dollar continues to strengthen off this support level. So we'll continue to keep an eye on that. Again, right? We come in, even on your dollar index, it's just how the market flows, ABCDs, beautiful 80-20 off the DXY. Again, sitting at key levels, right? So we know that we're at a key level from a monthly, weekly time frame, sitting at the support level. We drop a fib on there, and now you see we're at the key 61.8 level, and we are consolidating. Okay, so we'll see what the catalyst will be to push, right, this dollar index either in an upward direction or a downward direction, or maybe it'll continue to move sideways and we'll trade according to plan. Any questions on the dollar index? Huh?
No, sir.
All right, so I am going to switch over. I'm going to pop it to this Aussie CAD because it just posted it in the Discord, and this is one that I've been keeping an eye on. So one of the things, a lot of investors listen to a lot of interviews on Bloomberg, reading a lot of articles. A lot of investors, we see that this Aussie is moving to the upside. Of course, it's going to move in waves as it moves up, but a lot of investors are really favoring the Aussie for 2023. One reason, okay, is because what's going on with China and the reopening. Hey, the fact of the matter is China is the second largest economy in the world, right? So their reopening is huge in that respect, even though we still have concerns in regards to overall demand and growth in 2023. Okay, so that's about sentiment as well. Okay, to where we could see that boost, but also what a lot of people don't think about is not just about iron ore in regards to the Australia-China relationship, right? We know iron ore, key, right, ingredient when you're talking about making steel. Okay, you're looking at China expanding, growing, things like that. But also Australia is playing a huge part in this green revolution as well in regards to other, right, materials and things like that, elements that are needed, right, to support the green revolution. So you do have some investors, some major, hedge funds that are looking. They have a positive sentiment in regards to the Aussie overall. So that doesn't mean that we're not going to have our corrections and have price move to the downside, but we're looking at potentially over the long term further gains for the Aussie, and we'll see how that plays out. See how that plays out. See how the sentiment in regards to recession, how that plays out. How long and deep that recession may be. So there's a lot of factors at play here at the beginning of 2023 that we just have to wait and see how they play out. But you can see here on this Aussie CAD how this has pushed up to this major, right, resistance level here at 93.31. And you can see that if we close higher this week, we're going to have 2 candles to the left, 2 candles to the right. We're going to have a swing low. So if the week closes positive, right, doesn't take out this low, this is going to be a weekly support. And as we move down through the lower time frames, you'll see it already starting to come into play. So when we look at this Aussie CAD, right, and again, just the beginning of the year, really focusing in on price action and structure, you can see how, right, we're making waves. We broke through this level, and then we came back to retest this level. Okay, so that's a beautiful, beautiful break and retest of the zone. Okay, so if you're looking at a clean example there, right, you're studying the charts and the price action, look how price, okay, moved up. Price moved up, right? We broke through, we came back down to retest. Quick retest, right? Look how we broke through, right? Strong, but look at that huge bearish candle here, right? Strong momentum to the downside, but look, when it revisited this level at 90.42, we took off again, okay? That's a bullish move. On your lower time frame, smaller waves, right, you can see it, right, visually, right? This is why we're repping this out big time at the beginning of the year, right, 2023. You can see how support, it forms support, right? And of course, on your lower time frames, it's going to form that support a lot earlier. But when it came back down to revisit this higher time frame level, you can see that if you just draw a trend line, okay, you can see where price broke through and put right back up to this 93.31 zone, okay? Any questions on that break and retest concept? No? Okay.
No, sir.
So, all right, appreciate you. So now, as we move down, right, we can see, look how we pushed, okay? Right, how we pushed, potentially, right? But you do have a double top, right? But we're moving bullish. So we got that now. Is that a play that you could have taken, right, on the short here? Absolutely. Lower time frames, maybe you got 80-20, things like that. Here, we'll go down and we'll check it out, right? But you have, right, a double top. That's a great eye there where price reacted, okay? So out of that zone, price reacted to the tune, right, of 140 pips to the downside. But what I'm looking at here, okay, is if we're just looking at price action and structure, right? No fibs right now, right? No fibs. If we look at price action and structure, we seem to be coming into a level, right? A zone has resistance becoming future support. Okay? Has resistance becoming future support. All right? And at the close of this 4-hour candle, okay, you'll have a 4-hour support there. Okay? Lower time frames already occurring, right? Building blocks, building our way up through the charts. Okay? So because you're gonna have what? You're gonna have a 1-hour candle before you have a 4. You're gonna have a 15 and a 5 before you have a 1, right? So here, 4-hour candle close, we're gonna have support. And then it's just a matter if it wants to continue bullish, right? We can't control that. All we can do is identify the opportunity. So as we come down through your 1-hour time frame, right? And you look at this, you can see where if you were just playing the support and resistance game, right, which is really what it's all about, you can see that we are, right, past resistance becoming future support. You already have a 1-hour support level for me. Okay, you already have it. Now, if we drop down, right, to your 15 minute, you can see, right, that we have that trend line break. So you guys can see how this tracks all the way through. So you remember when we were on the higher time frame, and Carolyn, you identified that double top, and we said, hey, There may be an 80-20 there at that level. That's the confirmation that we may see a decline in price. There it is, right? So when you play an 80-20 out of the zone, TP1, that's on a 15-minute chart, everybody, over 100 pips. TP2, right, 153 pips. Now we're looking at the potential for a reversal, right? So when you see us map these out and place them in Discord, we don't want to do the traditional thing with trade signals, right, and just give you numbers, right? We want to provide you with a visual, so at the same time you can also learn, so you can kind of develop that eye and that spatial intelligence to look for potential reversal zones. Everybody follow me on that? Drop me a 2 in the chat. That's very, very important. That's a distinct difference between just having signals come to your phone, right, or whatever device with some numbers, and you visually not being able to really see what's going on, right? Because ultimately, as a trader, right, your breakthrough comes when you have confidence, right? Ultimate confidence, whether win or lose, in your trade setup, right? So that's our goal here in the circle, is to help you to become consistently profitable, independent traders, right? Huge difference, okay? So if it was all shut down tomorrow, you all will still have the ability to turn on a chart, fire up your chart, set up your workspaces, and still be able to find, right, these setups for yourself, okay? And if you're new, right, you eventually get to that point. So that's the goal, right? That's the goal, that's the mission, and that's never gonna change, right? So we don't have to go far back to see why. It's like, okay, we have an ABCD wave, right? So look, A, B, C, right? D extension here, first high after the D extension, okay? So look, D, and it becomes very, very, right? Very, very repetitive. It's pattern driven. It's a pattern driven market. Look, A, B, C, D, right? Our C becomes our new A. Our B becomes our D becomes our new B. And then we're looking for that C again to get long, right? That's how we identify that, okay? A, B, C, D. If you look here in the previous pattern, A, B, right? Pushed up, almost got that D extension, didn't quite get there. Pushed down, D. A, B, C, D. C, your lowest point within the A, B boundary. So right now, this is our C, we're finding support. Hey, that's an opportunity, right? That's the best we can do. All right, that's the best we can do with this thing. Any questions on the Aussie tab?
No, sir.
All right. Joy, not yet. Gotcha. Okay, so let's go back, right, and take a look, right, at another setup that we talked about earlier in the week, right, when we were doing our lesson, you know, on support and resistance, and we take a look at what happened, right, with, okay, the dollar yen, okay? So at that point in time, right, we have our A, okay? We said we have an AB boundary. So here's our A. Here's our B. Okay. Our C, lowest point within the AB boundary. At that point in time, this was our C. And then we got the bullish break. Okay, like this. This was C. Like so. Okay. And this was our B. A, B, C. At that point in time, the C, this point that price had reached around the 61.8 zone was our lowest point within the AB boundary. Okay. All right. Lowest point within the AB boundary. Like so. Okay. Then we pushed up, right? We said, hey, there's a bullish candlestick. We get in the trade, put our stop below the A. All right. Stop below the A. Okay. And I'm going over this because this is a prime example of what we talk about in regards to stop placement. Okay. Put your stop below the A. That's the first option. Okay. Second option, you put your stop below the C. Okay. Somebody answer for me. If we would put our stop below the C, would we have gotten stopped out? Yes or no?
Yes.
Yes. Yes. Thank you, JSC in the chat. Thanks for answering that for me. Appreciate it. All right. Now, so we would have gotten stopped out. But answer this for me. Did price eventually reach our target? Yes or no?
Yes.
Okay. Thank you. Now, that's the difference, right? In regards to, as a trader, how you want your trade plan to be set up. Do I want to place my stop tighter below that C, or do I want to trade smaller? Because of course we're going to take our risk percentage divided by our stop loss. That's going to give us our lot size. So with a wider stop below the A, we're going to trade at a smaller lot size, but it gives our trade room to breathe. Because as we always say, as long as price doesn't take out the A, it has no choice but to go your way. So price did push up, but look, it came down, it pushed lower, right? It pushed lower in the zone. At that C point, you would have gotten stopped out. Okay, if that's the type of trader you want to be and that's your trade plan, as long as you can stomach that, right? Putting your stop within your AB boundary, okay, has the higher potential to stop out, which is okay if you back test and you know, hey, I'm going to win, 35 to 45% of my trade setups, but I'm in a 3-to-1, 4-to-1, I'm okay with that. If you can stomach those losses, if you can stomach 4, 5, 6 losses in a row, it's part of trading, okay? If you can stomach that, then you're cool. And a lot of times that's your discovery process. Okay, nobody can figure that part out for you. All right. Now, right, if you can't, then you want that stop to be below your A, trade at a smaller lot size, and let that price do its thing. Let price do its thing. And you can see that we came straight up and we still ran into that target. Okay, so that's a good lesson there. And now, where are we? We're at a brand new AB boundary. All right, we're at a brand new AB boundary, and we're in this 80-20 zone. So if I'm looking to buy, right, if you're saying, you know what, I'm thinking long the dollar against the yen, you're not going to buy in this zone. Okay, not going to buy in this zone. I'm speaking for me and my trade plan, right, and the philosophy that I follow. Okay, now I'm not going to buy there. If I'm a buyer, okay, if I'm a buyer, I'm gonna wait for price to retrace and pull back deep, right? So and that requires your patience. If my bias is still long on a dollar yen and I want to take a shot, I'm gonna place, my stop below that A, let it pull back. And now if we pull back to a 61.8, if we pull back to a 61.8, there's my risk. Right? 61.8 pull back, we project a 1.618D extension. Now I'm gonna leave it here, but I'll just show you guys. I always put it a little bit before, right, that zone, because we know how price can react. All right, now take this here. This is my potential reward. Okay. So there's no magic, right? It's just math. Okay. The deeper the retracement, and my sentiment continues to be long, the deeper the retracement, right? It puts me in a great risk to reward scenario, but it requires patience and discipline. It requires patience and discipline. Everybody follow me on that, drop me a 3.
Hey, Benny, real quick, can you give them the formula for calculating the risk?
Yeah, absolutely. Absolutely. I'll jump to it in 1 second. Jump to it in 1 second. I could do that for sure. So now, if, right, we know, okay, I'm gonna clear this off now. We know that I am in a sweet spot. We know that the price moves in waves. We know that this is one of our sweet spot zones. So as a trader, if I don't mind taking counter trend setups, I know that from the 118, 127 zone after a shallow retracement, here's 23%, okay? We see how price pushed down to the 23% level, okay? And then it broke that B boundary and pushed up, and now it's stalling around this 118, 127, okay? Price has a tendency to like to push down to at least that 382 or deeper, okay? So that opens the door for the possibility of a counter trend move. Okay. So if you play that, right, you could play it tight, put your stop just above the high, or, right, similar scenario, widen your stop, trade small, and you can say, you know what, I'm gonna put my stop at that D extension. And if it doesn't hit that D, it's gonna correct, right, and move back to at least that 382 or deeper. Wider the stop, the smaller your lot size, okay? And it's all relative to your account, okay? And we'll talk about that here in a second. So that's the counter trend move. This is the 80-20 phrase that we coined, right? The 80-20 sweet spot zone that we trade, okay? Sweet spot that we trade for over 7 years, okay? Boom, classic move there, okay? Now, so when you think about it, whether you're a bear or a bull, you need price to move in this direction. If you're a bull, you want it to move in this direction and give you a low price in the buy zone for you to take a shot long, okay? So this is your B to C move. If we sell in this zone and reverse out, you're looking at a C to D push, just like we saw on the Aussie CAD. Now, so let's talk about this scenario and this setup, okay? And how we can work out the risk on this, okay? So we're gonna put our boxes back in. And if we look to get long on this trade, okay? Now, we are going to frame this out. Simple math, if you don't have a calculator, right? We know we have difference in tip values and things like this, but this is the basic math that you could do quick, fast, and easy from the calculator on your cell phone, all right? If my stop is below this A and my risk, right? It's gonna be, say my buy zone is right here at this 61. Say I wanted to take, right, a buy limit, okay? Boom, I'm just gonna set up a buy right here, right at my 61. Okay. So this, okay, give you a visual, will be my risk. All right. This is gonna be my risk. So we're looking at about, call it 90 pips. We're gonna call this minus 90 pips. Everybody with me? Drop me a 4 in the chat. Let me know you guys are here this morning. Awesome. I need to know. This is important. 90 pips. So I'm just gonna move this up right around that zone. Okay. Now we are going to map out, if we get to this D extension, I'm gonna look at the overall move, the C to D push, 61.8 pull back, 1.618, the extension, like so. All right. Now, look at it here. Boom. Boom. Call it 270 ticks. All right. So we're going to call this 270. Take that out. So overall move 90 pips to get 270. Somebody tell me, what's my risk to reward on that? We'll reward the risk. 3-to-1. Awesome. Carolyn, neat, awesome. Okay. That's a 3-to-1. Okay. If I put myself in 3-to-1 scenario, okay, we'll use this as an example. If I put myself in 3-to-1 scenarios, how many trades out of 10 do I need to win to make money? 3, right? Awesome group. 3. Okay. So I don't even have to win 50% of my trades, right? Do we want to do that? Yep. We want to win as many trades as possible. But that's how the math works out. So let's talk about this. All right. We've got a $2,000 account. So let me shrink this a little bit. This is important. There's no use in doing technicals or taking setups if we don't get the math right. So what is going on with this? Anyway, so we've got an account. Let's say it's $2,000. $2,000. And for the day, let's say our risk is 2%. Okay. Let's do 2%. Okay. Let's do 2%. All right. Now, 2% risk. Somebody tell me. Got $2,000, we want to risk 2% of it. Okay.
$40.
$40. Amen. So equals, we're going to put equals $40. $40. That's the risk. Okay. Now, somebody tell me if I'm risking 2% per trade, whether it's a $2,000 account, $1,000, $500 account, if I'm risking 2% per trade, how many trades in a row do I have to lose? Right? Do I have to lose to blow my account? 50. How many people are here have blown their account in less than 50 trades? Before. Right? Me too. Me too. Okay? Me too. So that's $40. So what you're going to do is you're going to take your risk and divide it by your stop loss. Okay? So in this, you're risking $40 and you divide that by 90 pips. And that should equal like 44 cents or something like that. Call it 40 cents, right? So you're going to take that trade at 0.04 micro. Okay, 40 cents. Okay, 40 cents. Okay, so if that 40 cents travels 270 pips, Somebody tell me, how much money did you make? Right? 0.40 times 270. 108 bucks. Right? Give or take. Right? We know there's pit values and things like that, but $108. Okay? You just made 108 bucks if you win that trade. Off of 40 cents. Okay? 40 cents. You can walk and find 4 dimes on the ground. Right? $108. Okay? If we lose that trade, we lose 40. Right? That's it. That's it. And people may be thinking, right? How long would it take for that trade to play out? I don't know. Don't know. Right? That's up to the market. We don't control that. I don't control, right? All of the whippy nasty, all of the consolidation, all of that. All I know is, hey, I do my top-down analysis, the part that I can control. Control what I can control. Right? And we see how our trade idea plays out. Right? If you get a deeper push in the zone, say we retrace, right? To that 786 level, then it becomes easy, right? That trade takes off, it floats, okay? It pushes down lower. The C becomes a lower area within the AB boundary. You just adjust your stop. Your take profit like this, okay? I've got a 786 pullback now. The projected correlation is the 127, the extension. I bring that down, right? I bring that down. For this play here, the 61.8, stop loss is the same, right? Profit target goes down, right? Just a bit, okay? 203 pips, but we're still positive, right? We're still positive, okay? That's how you do it. That's how you do it. But overall, no matter what type of setup that you find, whether it's 80-20, you're always, right? The lesson in this, take your risk and divide it by your stop loss. Okay? So that's $100. Now, we have to put things in this proper perspective because I know we live in a Lamborghini universe. If I were you guys, if I could do it all over again in trading from day one, and I had somebody explain to me, right? Well, give me a realistic view of what this is all about. Okay. I would target 2%. Can I make 2% per month consistent? 2%. 2% a month consistently, right? That's eye-opening over the long term, right? 24% a year? I know it doesn't sound like much right now to some people, okay? But look at your returns on the S&P. Let's be real. Let's be realistic about this thing and what this is really about. If you could do 5% a quarter and you could do it consistently, that's the key. You will do very, very well in this game because the money's out there. But there's no sense in going after the money if you can't be consistent. Everybody follow me on that. Drop me a 5 in the chat. So you might be trading in micros right now, You have to build a longer term vision for yourself. Do I want to be a pro at this? And if I want to be a pro at this, what's realistic when we're talking about the markets? Not what's on the latest YouTube video that got 1 million views. What's realistic? What's really happening in markets? Okay? Not the one-off, I made 30% this month. What's real? Okay? So you can easily see that this is all relative to your account size. If you're in a situation where you come across a setup and you do the math and it comes out like, man, I really can't even trade that. At the minimum, trade one micro, right? Trade one micro, 10 cents a pip. Build it, right? $5, $10, $15. Hey, I just made $100, right? I just took my account from $400 to $500. Now you know what I'm gonna do? Oh, let me go up to 20 cents, right? And get consistent and build. Right? Pay yourself. You have an extra $20, $50, $100, add it to your account. Right? How much is your bank paying you right now? Joy, bottle return money. Absolutely. Absolutely. So that's it right there, right? So Reese, there you go. Simple. Simple. Any questions on what we covered in regards to this? Yeah. Reese, I go there from time to time myself. Me and Ryan talk about it almost every day. And it takes time because we're human. Right? We're human. Right? So that's that. Right? So when you go through an entire month and you look back, because this is what happened to me early in the game, right? You look back and I would be like, man, like I either broke even or I lost money this month. And then I would look and say, man, I was trading like this. But then what I would do is, right, I would get emotional and I would bump that lot size up. And what I was doing was I was wiping out my gains. So my gains that I was making at 4 micros at 40 cents, I was wiping it out because I wanted to jump up back in the day to a $2 per pip, 2 mini lots, 3 mini lots. And I will wipe out my gains. Has anybody been there? Right? No. Casey is no longer a part of the inner circle. We wish her the best, right? She decided to, move on and take the methods that we taught her, right? And do it on her own and turn it into her own thing. Right. So no, she is no longer a part of the inner circle family. It is just me, Benny Allen, and Mr. Ryan Carthage. Right? From here on out. This is who you got. All right. So to answer your question, right, in regards to Casey, Caroline. All right. Now, what else? Ryan, I want to go back and take a look at this Euro Aussie setup. Okay. All right. So still moving, right? We're getting a reaction, right, off that 236. Okay. But that's been an incredible move, right? Thanks, Ryan, for that setup, right? 153 pips top side, turning over a bit, right? And we'll see, and we'll see how that continues to move. Maybe head it down to a retest. I know I reduced mine after 100 pips, so I'm good on that. So that's where we are on the Euro Aussie. Just wanted to look at that 4, right? And then that's 15. Move it back down, right? You see how we came back through this zone, right? So there's a possibility, right? And I know you talked about that yesterday, that we may turn over and come back down. We got a little double top action there, here, right, on this move. Okay. So that's where we are. I'm gonna go back and take a look at this gold to see if we're continuing this bullish momentum. I know we had mapped this out, right? And look, see, are we talking about that level? See how we push through? Right up into that 1857 now. Right? See how that works? Right? We finally broke through, and now we're right into that zone that we were talking about here on gold. So we'll see how price reacts. All right. See that? Okay. Here. Brand new AB boundary. So let's see if we go right into that corrective phase. Same. You gotta see how no matter what the asset class, we're looking at the same price action. Okay. Same ABCD wave. Okay. Look how this broke and retested and moved up. Okay. Hit the D extension. So even if you're trading, right, a different asset, look at that pullback. Past support resistance becomes future support, pushed up to the D extension, right? So that's that move. Huge. Okay. Now we're looking for price. Can we get a low price? And then do we get a bullish continuation on gold, right? I would like to see it correct, come back into our buy zone, right? And then see what price wants to do from there. Any questions on gold?
Nope.
Yep. Just understand, right? Huge in regards to fundamentals. Okay? Huge in regards to fundamentals. Know that we've got non-farm pay, we've got ADP today, and we've got non-farm payrolls coming up. Right? So we'll see how it reacts. So you guys see how, right, through all the waves, how using price action, support and resistance, laying your fibs over top of it to really build out, you know, a solid picture for you in regards to price. If gold gets impulsive, do we know, right? Small pullback, break above, right? Maybe we get a retest here. And if we break that and break that B boundary, we know that there's a possibility that we retest and we go into our 118, 127. Okay. Same thing over and over and over again. Over and over and over. All right. So that is gold. We've got just a little bit of time left. Is there a pair that, take the first one, that anybody wants to look at in particular? And of course, we'll continue to post setups. Been a good week so far. Setups in the Discord. Euro USD. All right, let's take a look at it. It's going to be an interesting one ahead of tomorrow. All right. So we've been moving bullish. It just continues to flirt with that 107 level. Okay. Flirt with that 107. We got to push down. But look, this is right. This is the level right here. If we push through that 107 level, then we look probably for a retest and we look to continue to move up. Okay. Positive data, right, out of the Eurozone. Okay. Don't be surprised, right? If we got ADP today, maybe we see a reaction for the US dollar. But don't be surprised if you start to see this move sideways a little bit, especially ahead of non-farm payroll, right, and employment numbers for the U.S. On Friday. Okay, so this is where we are, just hovering. Okay, so what I'll tell you is that any break above, right, this 107 zone here. Okay. We're looking for that sentiment to remain positive for the Eurozone, and we get long. We continue long above 107. Okay, this whole zone, 107.89 is the top of it. Right? We climb the stairs, right? Here's the resistance. Yeah. Right? Here's resistance here on the daily. Okay? Like this. Boom. Take that down to the lower time frames. Right? To 109. Okay? Above that, we run into another weekly resistance level at 105. Okay? And we may have some 4-hour zones. Right? But we may see it continue to climb the stairs. If we get positive data out of that jobs report, we may see this daily level break and look for a move lower, right, in the short term for the euro dollar. Okay. Any questions on that? Here we are. Okay. As we loom ahead of tomorrow, right? So we'll see how we finally broke out of the zone on the 4. Okay. Take these off. Got it clean. Okay. Tried to break out, couldn't. Came right back down into the range. Tried to break down, couldn't. Came right back up into the range. All right. So all we could do is wait and see. Right. If we push down from a 4-hour perspective, we take out that low. Right. Then we look for price to potentially move for a lower correction. Now that we zoom in on the lower time frames, like so. That. Okay. And then we push higher. All right. So we'll wait. It's doing the dance. Doing the dance back up in the range and moving sideways right now. We need the catalyst. We need something to push it. All right. And tomorrow might be the day. Like I said, we may see some type of reaction from ADP. But we'll see. We all know that investors are really, really waiting on that Friday report. Okay. Especially on the heels of JOLTS and ISM manufacturing data that came out for the United States. All right. Pretty mixed bag right now. All right. Take a quick look at GU. What do we have? All right. Still holding at that level, needs to make a decision, right? Can be kind of tough to trade when you got the DXY, right? When you go back and you look at the US dollar, how it's just sitting right at that level and moving sideways, right? You can kind of get whipped back and forth, right? But right now, right, we see how we reacted. And you can see how we're just bouncing around. We started out bearish, and now we pushed, or we hit the low, and now we pushed all the way up from a weekly perspective, taking back some of that bearish move, all right, with the data that came out yesterday. And you can see, right, look how that's just whipping around now. Kind of the same thing, right, that Euro USD. So we need to wait. We need a catalyst. We need a fundamental catalyst to push it out of the zone. All right, so that's where I'm at. All right, just looking at it for price action and structure, moving sideways. And like we always say, when in doubt, stay out. When in doubt, stay out. And if we just talked about today, hey, if I can aim at 2% a month, right? 2% a month. You don't need to be in the market every day for that. We're always looking for opportunities, but that doesn't mean that I have to trade. You don't have to trade. Appreciate it, David. Thank you so much for the feedback. We appreciate you being a member of the Inner Circle for as long as you have, right? We're always here to help, man. Thank you so much. So, thanks, Carolyn. So, you don't have to be in the market every day. You don't have to take You see some of these moves that we post in the Discord, right? So you have to develop your trade plan, set goals for yourself, make sure you journal. We're working on some things in regards to journaling, working with some different software. Now, so once we get through and decide on which direction we want to go in regards to that, we'll sit with do some training on it, things like that. But if you have a goal of 50 picks a week, 100 picks a week, right? You may only need one setup. Right? You have to build that picture for yourself. The setup that you're Aussie went over 100 pips. Right? I think the NZD USD was like 20-something pips to TP1. Right? So we put some longer ones in there, some 80-20s, and then we put some shorter term setups in there too, because we know we have all different types of traders in the group. But set a goal for yourself, and just think, man, I want to set my plan up. Hey, how do I get 2% a month? And then anything above that is a bonus, right? It doesn't take as much as we think. The key is getting consistent. And consistent, we don't mean winning every trade, right? Because that doesn't happen in trade. It just doesn't happen, right? As we saw today. So, Ryan, anything to add before we close out today, sir? Great session, everybody.
Matt, I'm just going to echo your sentiments regarding consistency is not winning every trade. Consistency is falling in love with the process that enables you to grow. The results will come, but you got to stick to the process, right? You got to stick to the process. And it takes time to develop that discipline. However, the more you do it, the better you become. But you got to get started and really focus on what the process actually is, right? Diving into the training, going through step by step, practicing each piece. And then as you start to explore and you're practicing, you can start to develop that trading plan, which again, we walk you through in the training as well, right? You develop that trading plan. Now you have a framework and some guardrails, and you can start moving. And then when you do stray off, acknowledge it, document it, understand what caused it, and then create a guardrail to keep you closer to your lane, right? That's how you go along this process of becoming consistent. So great session, bro. Great session. Keep at it. Keep putting in the work. Keep putting in the time and the effort.
Absolutely. Appreciate you, man. Well said. That's so important. Keep it all in perspective. Keep it all in perspective. With that being said, hey, I look forward to seeing everybody tonight, 9 p.m. Eastern Standard Time for the agent session. We'll see. Hey, is the market going to react to these ADP numbers that are coming out today in the U.S.? We'll check it out. Have a good day, everybody. Great session. Thanks again for being here.
Thank you.
You're welcome.
Bye.